Welcome back. Today, we're looking at the partner's current account. So remember, we have the appropriation account, which is the first half. Now we're going to look at the partner's current account. So the partner's current account is that other half of the double entry, right? So remember the appropriation before, that reflects how the partner's interests in the entity have been impacted due to their activities during the period that we're reviewing. So the partner's current account is the equivalent of a change of equity statement. So how do we do the partner's current account? What are the steps? So step number one, the brought down balances from the previous period, if they are applicable, you will put them in. Now, of course, you can't got brought down balances if the partnership no start. But if it was a going concern, then obviously you'll bring them down from the period before. All right, so there we go. Secondly, you're going to add the interest on capital gained that you had calculated on the appropriation account. All right, you're going to add it on this current account. So each individual partner gets their interest on capital added. Thirdly, what you're going to do is you're going to add the salary that the partner or the partners would have received. Again, this information is coming from the appropriation account. So we're going to add the salary or the bonus. Next step will be to add the share of the profit that they got when the profits were appropriated. So again, you see this is coming from the appropriation account. And so we record it here on the current account. So all those first four items would have shown the increase in equity of the partner. So now what we want to do is to look to see how if there was any reduction in this increase. So step number 5, you're going to remove all the drawings and the interest on those drawings according to what had happened to the partner. So if a partner withdrew money, he had to pay the interest on drawings. You're going to take out both the drawings and the interest of drawings from that partner. So the difference between the increase in equity and the decrease in equity will now be the new balance, or in other words, the change that is now being reflected in the partner's equity in the business. All right. So you have your old balance when you started, and you're going to end with a new balance. All right. And that reflects the current account. So let's just run it again. So you start with the balance brought forward from the previous period, and you're going to add the interest on capital, the salaries, and the share of profits. And you're going to take away the drawings and the interest on drawings to arrive at the new balance for the partner's current account. And if you examine this carefully, all that's happened is that wherever you took away something on the appropriation account, you added it in the current account. And wherever you added something on the appropriation account, you would have taken it away here on the current account. So that is the partner's current account. And next time we'll examine admission of a new partner to the business. Again, this has been produced in association with TV Barbados.